Hello, founders, and welcome back to our final segment, part 3 of creative ways to control your cash flow through COVID. Our Nail the Number Pro here today joining us is Kirsha Campbell. She's the president of the Cash Lab. Welcome back, Kirsha. Thanks for being here. Okay, so many valuable pieces of information, tips and tools that you've given us along the way, but this segment is actually all about the solutions. I'm sure this is the segment that everyone's been waiting for. So let's just take it away. Where do we start? Where can we start to build solutions and fixes for cash flow?
One of the first places to start is having that assessment of where your business is at. So number one, ensure that your bookkeeping gets up to date, your transactions are current, get that up to date. That's the first step for any strategy, any way forward. So that's the first thing to get done. Ensure also that on an ongoing basis, at least monthly, you have a bank reconciliation being done in your business, whether by you, your bookkeeper, whoever. What that does is that cross-checks what's happening in your real life bank account to what's happening with your internal records. So it's going to help you to catch quickly errors and fraud as well. So you want to be on top of that bank reconciliation process quickly. Another thing is having monthly reviews in your business. Were you profitable? Why were you not profitable? Getting into preparing your budgets, having your budgets prepared. Why are we not on track? What's different? Should we keep doing this strategy? Should we keep not? Should we discontinue this type of service, this product? Getting into all those areas in your business. Also, definitely start using cash flow forecasts in your business. That helps you big time. It's going to help you to decide and know quickly, am I going to be in the red in a bank overdraft in the next month or two? And in knowing that in advance, you're going to know, okay, I need to change strategy. I need to probably stagger certain payments, because that cash flow forecast captures your actual cash flow moving in and out of your business over the next 6 months, month, 2 months, however you do it. When it comes to accounts receivable, it depends on where you are at. Number one, if you realize a situation where you're owed a very long time, there are different strategies to handle that. The first thing is, if it's a case where you need the money right now, like yesterday, you can do what's called factoring. That is where you contact a third party. There are a lot of companies that do that, and they'll say, okay, I will purchase this accounts receivable from you. Of course, they're going to pay you less fee. You get that money right up front in your business, and then they are now legally responsible to follow up with that debtor. So if you're strapped for cash, that's one way you can look at, I need to get those monies in my business right away. If you're again strapped, go ahead, Tanya.
Sorry, I was just going to ask then. So factoring, they're charging you, is it, and maybe it's different in every case, is it a flat fee or is it a position? Is it a percentage of the outstanding amount that you're looking to collect on?
It's a percentage.
Okay.
It's a percentage. Yeah.
Okay. Thank you. Sorry to interrupt.
Another thing, if you need cash right away, I call it being your own banker. So you look within your business, is there something you can sell? Sometimes you have equipment or you have certain materials that, to be honest, you're not really using it fast enough. So if there's an opportunity to sell, get those monies in, and then if you need to use it later, you rebuy it or lease. Those are options to get cash coming in right away. If it's a case where your cash flow problem might just be a short-term thing, you can say, okay, I can put these expenses on my credit card. I get, on average, most credit cards are like 30 days to pay, and then you can spend and you have a 30-day buffer to pay. So that's another strategy to use, of course. Explore discounts. A lot of times invoices come into your office. You're just going ahead and paying. You're not looking, did they give me 30 days or 60 days? Is there a discount if I pay early, pay late? Get in tune with what's happening. Build that relationship with your supplier also. One of the forecasts for 2021 with all that's happened with COVID is that, to be honest, you're going to have situations where your accounts receivable are going to be higher and higher because some persons just cannot pay. Where does that leave your business? What that means for your business is you have to now deepen your relationship with your suppliers. You need to also explore other suppliers too, but you also need to say to your supplier, have a conversation. How are you standing? Are you on track to pay? Are you not? How about if we explore you paying a part versus, everything one time? Get into that conversation, that dialogue, because getting some monies in on a regular basis is going to be better than getting no monies in. And at least, upfront, this is all I'm getting from this person. I need to think of other strategies to keep cash flowing in my business. So those are some of the strategies you need to, as business owners, be looking at, because that's one of the forecasts coming in as well. And don't forget that with COVID, especially if you have team members working with that, because of the constant updates with the social distancing coming from the health sector, that impacts how many persons you might have on board at a particular time. It's going to also impact how quickly certain jobs are done. So those are things that will impact how quickly your job is done, the cost, filtering back to your cash flow as well. So get in tune with what's happening in the wider environment so you're able to plan in your business strategically and properly. When it also comes to accounts receivable, a lot of persons, business owners, you are not looking on your reports. You don't even know who owes you and how long. I've seen the horror stories. I'm owed for years. I didn't even realize. I can't believe this. I see it so often. And it's sad. However, it shows that there's still a lot of work and education to be done. So be aware of your reports. If you don't understand, reach out for help. This person owes you this long. It's too long. I need to get into certain strategies to turn that around, phone calls and all that for sure.
Yeah, getting on top of it, right? Getting on top of it. Are you seeing a lot of business owners actually charge or collect the interest rate that they, it's usually in the fine print for, for accounts that are outstanding over 30 days, we charge 2% on that interest rate. Are you seeing business owners actually follow through and charge that as a way to try to get that money in? Or have they not been doing that through COVID?
Oh, it's still not happening. No. It's still just there. What I see more often happening are the late fees being implemented.
Okay.
Yeah.
Mm-hmm. Okay. But I think it is important.
Yeah.
Yeah, it's important to kind of follow through on those terms that you've set, right? Or if you're not following through, it's because you're having the conversation with the client saying, listen, this is what we agreed to, but if you can get this in, we're going to waive this fee, right? It gives you some leverage to actually try to get that money in a compassionate way, right? Everyone's.
Exactly. Businesses, we're all humans. Behind every business, it's a real person. But also bear in mind that your financial systems need to be effective, need to have processes in your business that are working. For example, when it comes to accounts receivable, you sent an invoice out. Are you sure the company got it? There are times where you're sending it to an email. That email is no longer there, person's changed. So getting into just simple strategies like those, these are the methods for payment. Does the client prefer those methods? How can we compromise? So getting into those areas impact how you're paid, right?
Yes. Yeah. So important. And I think too, as much as many founders even dread the idea of selling, the idea of collection and getting that money in is probably, just one step, further for them, like more worrisome or cumbersome, because it does mean that personal contact is saying, listen, this bill hasn't been paid.
Exactly. And it's a real issue. And I did see a bit of that with COVID started, they were afraid to reach out. And I was like, the bigger companies, they were not afraid. They were still sending the utility bill.
Yes.
Amazon, you still have to pay. There's no credit to Amazon, Walmart.
Yes.
So it has to definitely go back to changing the culture of how we operate as business owners as well too.
Yeah, no, so bang on there. I've even noticed that some of the credit card companies too have been increasing their interest rate, right? Because people haven't been paying, and then as soon as you miss some payments, then they up their interest rate. And so, the best in sector performers are actually driving this. Business is about money. We're not nonprofits. We're not charities. We've got to make sure we get that cash in the door. Two last questions here for you. So, what is your experience with is it called white labeling or in-house financing options? So for big purchase items, whether it's education or, you know, a $20,000 couch, where you can get third parties to actually finance it, but it gets branded under your brand, so it looks like you're actually the financier. Have you had much luck with that with clients, or anything
And
we need to
again,
watch for there?
yeah, again, it all depends. So one of the things to look out for there is definitely the agreement. You know,
Okay.
the getting those legal eyes on the agreement. There are a lot of horror stories, deals turn sour because those steps from the beginning were not covered. So you want to make sure that when it comes to intellectual property, trademarks, those aspects are covered appropriately. You want to also be clear on the quality because it's going on their white label. However, you know, you are the ultimate person they're seeing, they're making that purchase from. So you want to ensure that quality is covered. It's a profitable to you to go into this transaction in terms of what you're going to resell for as well. So those are definitely some of the things to look at. And it might not always be the cheaper option. I definitely always suggest looking at various alternatives and then, you know, make that decision. Is it the best option? Because sometimes it might appear, oh, it's a cheaper way, but then costs so much with all the steps to cover and double check and all that too.
Okay. Okay. Great feedback. Okay. And my last question for you, I'm looking to wrap my head around this idea of the forecast. So the forecast, when we're on top of our numbers, we've got the portion that is here's projected, and then we're merging the actuals with the projected, correct? Like it's a look at the two. So how do we then, because when we're doing the projected, kind of bear with me as I look to explain this, we typically hold a benchmark for the cost of goods, right? We'll say, here's the income, our average cost of goods on this product is 37%. So we're going to forecast that. But that doesn't necessarily mean we're spending that. So let's say it's inventory, right? And we know that we're typically marking it up by X. And so we know that the cost of goods, but we're not going to be repurchasing inventory until maybe 6 months down the road. So it won't actually come out as a cost of goods in the month that we've planned it. It might come out 4 months after. So what is your recommendation? I'm just trying to figure this out to wrap my head around it. What's your recommendation between kind of merging those two dynamics together versus what we've planned for cost of goods, but what our actuals are, knowing that we're not going to be spending that money that month that we've planned on it?
So there are lots of different angles to look at it from. So remember, you made a budget, you made a plan, right? There's some, and it depends on what you choose to do in your business. There are pros and cons, different ways to manage it. So you made a budget. This is your budget. However, you can choose to say, I'm never ever going to change that budget. I'm always just going to say, this is the budget. I will just compare the actuals. This is my actual situation to budget. That is one scenario. When you get into forecasting now, you're going to say, okay, this is what my budget was. I did budget, let's say $10,000 for sales. However, based on halfway through the year, based on what I've actually gotten in for sales and what's left from the budget, it's not going to be 10,000. It's more looking like 8,000. So what you have to do there, you now have to merge those actual plus budgeted amounts, their forecast for the sales, and then you trend all the way down and update all those line items. That's what you're going to have to do. So you're going to have an updated cost of sales ratio, updated labor cost, updated expenses. So if you're going to take that approach, all areas, all the way down to profit, you're going to need to update that forecast. Some persons, depending on what's happening, you can just say, I'm just doing an updated sales forecast, or I'm just going to update just the expenses. I'm not going to do every single thing. So it all depends, because remember, you can have your budgets for all different areas in your business. So depending on the volume of work that involved, and of course, does the benefit outweigh the cost of doing it too? That's another thing to look at. Will this really add value to our analysis? That's another thing to always bear in mind to decide if you go that route. But definitely, you'd have to update all the different line items, have an updated cost of goods sold, and that's going to be based on, again, merging actual plus budget to come up with that new ratio for cost of goods sold.
Okay, perfect. Thank you. Thank you for that, for giving us a little bit of understanding there and some options in terms of how to deal with that. Well, thank you, Kirsha. So appreciate your time today. I think that, one of the big takeaways that I have had with respect to numbers over the years is that you never get it perfect. You never get it all figured out. It doesn't always line up. You never, all the answers just magically appear. There's some months where you did better than you thought you were going to do, and you did your little victory dance. But I have noticed it is just small, consistent steps forward. Just, sitting down with the budget, trying to figure it out, just setting that time aside, right? Every week is what I'm hearing. I mean, monthly if you can, but the more uncomfortable you are with it, probably the more often you need to sit down and just start getting yourself comfortable with even looking at the numbers. Yeah.
Then and it's looking at growth. Growth is exciting. Like with my kids, what I used to do when they were 1, I can't do it now that they're 6, right? So in the same way, your business is growing. What you used to do when you were just having 100,000 in sales, you need a different system when you're at 5 million, 10 million, right? You need to look at your business like that, because think about, it's not only just your business operating in isolation, lives are being impacted, why you started your business, the future, and you're making changes. So it deserves that respect, that effort. And I think a lot of times you just say, you keep putting it out thinking, okay, but delay is cost. Like cleanup work is just so costly. If you're called for an audit, then it's just going to be costly getting everything up to date. Missed opportunities, missed profits, right? If you're approached by an investor, somebody wants to partner with you, how ready are you for that, right? Just looking at all those reasons why we need to pay attention to what's happening in our business as business owner. The large corporations are doing it. They're growing, they're successful. Why can't small and medium-sized organizations do it too? It is possible.
Absolutely. Absolutely. I remember, it reminds me of a saying, luck is when opportunity meets preparation.
Yeah.
Right? So just do the numbers, just get comfortable getting uncomfortable and taking, one step, putting it in front of the other, and you will get there. Kirsha, so appreciate your time. You are here. Your contact information is below for founders that don't know where to start. You're available to help support them. And again, this is why we started the Gab Lab. It was about getting information out there. So just take that first step, start taking action with it. So appreciate you for being here, founders. Thank you for listening. Thank you for watching, however it is that you've chosen to tune in. And again, just a huge thank you and shout out to our episode champion today, Community Futures of Saskatchewan. They've got 13 offices across the province of Saskatchewan to help business owners in situations like this. If you don't know where to turn, reach out to them. They're there to help you build your business, to nail your numbers. Thank you all for listening and watching. Until we meet again in the Gab Lab, please stay safe, stay strong, and as always, stay financially fierce. We'll see you next time. Bye for now.